Hello, good morning. You're watching Buy Now, Sell Now on ET Now, and I'm Vinny Motiwala. Along with me, Cheryl D'Souza as well. Cheryl, a very good morning to you as well. Markets managing to hold on to 22,650 above those levels, nearing 22,700.
Absolutely, Vinny. A very good morning to you. We're back after a day of break, and if you look at the markets, yes, we took it a bit easy in the opening session, but from there on, we've tried to actually recover from the day's lowest point. So over 100 points recovery coming in for the benchmark indices from the day's lowest point. Let's take a look at what Nifty Bank is doing, because there you can see some subdued trade coming in, and all thanks to the sharp knock that actually Kotak Mahindra Bank is witnessing in trade today. 3.6% downtick coming in for Kotak Mahindra Bank. But talking about the other list of gainers, you have Power Grid, BPCL, Bajaj Auto among the other set of gainers. While on the losing end, like I said, Kotak Mahindra Bank is the top loser. You have DVs as well as Tata Consumer taking it a bit easy in trade today. Among the sectoral indices, if you put the spotlight, then you have the Realty Index that's seeing a top, rather the top sectoral loser in trade today. 1.6% downtick coming for the Realty Index. IT Index is subdued. While on the gaining end, you have the PSU sector, in particular, the Nifty PSE Index. That's the top sectoral gainer, 1.8% uptick for that one. Auto, oil and gas, all of them holding on to good gains. So that's the way how the markets are looking like at this point in time, Vinny. Definitely subdued moves, but off the day's lowest point.
Okay, surely subdued news, but off the day's lowest point, that's the word on the market as of now. But we have RPG Life Sciences, that's a stock that is in focus today. They reported their numbers. When you're looking at it in terms of numbers, revenue saw growth of 7%. Margins have seen an expansion as well. But to talk more about their numbers, what should we be expecting from the company going forward? We do have the Managing Director at RPG Life Sciences joining in with us, Yugal Sikri. Thank you so much, sir, for joining in with us this morning on ET Now. I want to start by talking about your domestic formulation side that accounts to almost 67% of your sales. What is contributing to this growth that we've seen in the segment? And going forward, how do you see the mix changing and the breakup for domestic as well as the international formulation side in terms of sales?
First of all, thank you so much for having me on your show. Just a couple of sentences on the overall performance, then I'll come to the domestic formulation very quickly. I think it's been a remarkable year for RPG Life Sciences. We have, for the 5th consecutive year, we have retained an upward trajectory on sales and every single profitability ratios, whether it's working capital management, cash flow generation, and very importantly, you talked about domestic formulation business, which makes up 67% of our turnover, registered one of the fastest growth. We have been 7th fastest growing company in the domestic arena amongst the top 75 companies of the pharmaceutical industry. Very importantly, the growth, which is almost flattish for the industry, our volume growth was about 13%. 13% has been the volume growth. Now, this has been driven by a number of measures, a number of pillars I talk about. Product portfolio rejuvenation, new products are contributing almost about 30% of the sales. Our strategic brand, textbook iconic brands have been rejuvenated by life cycle management strategy. We have a brand called Neprosin. I talked about it earlier that we are working toward reaching it 200 crore. We achieved a great milestone. We grew 20% plus. Market share went up. We touched around 73 crore plus or so. We talked about immunosuppressant basket, which we take it to 100 crore. A great milestone has been achieved in the domestic formulation business, where we have reached over 70 crore now. Growth 16% or so. Product portfolio rejuvenation working very, very well. We have productivity improvement plan. Productivity has moved to close to about 6 lakhs now, which used to be about 3 lakhs or so about 5 years back, by a number of productivity improvement measures. Third, our customer coverage has expanded significantly in our all customer segment. We cover close to about 90% of our targeted customer segment. And lastly, the efficiency enhancement, org structure optimization, both back end and the front end. I think has contributed to significant improvement in the margins. I feel very good to share with you that in the last 5 years, we have done over 1,000 basis points increase, and margins have been up consistently year after year. And this year margins have touched close to about 23.3%. The growths have been significant. We have 26% growth in EBITDA, 29% growth in PBT, and close to about 28% growth in the PAT. The cash which is there in our books, we are working towards utilizing those cash both for the capacity expansion of our which intend to use for export, as well as we have kept the cash for our inorganic way of growing the business.
Right, absolutely. Very good morning to you, Mr. Sikri. This is Cheryl also joining in the conversation. You did touch upon your margin, and yes, it's been very consistent when you look at the rise year on year on a year-on-year basis for your margins. But do you think this uptrend will continue going ahead, given the fact that we are seeing geopolitical tensions? There's also inflationary pressure across the world. So do you think that you will be able to sustain this margin uptrend on a quarter-on-quarter basis as well, and also on a year-on-year basis when you talk about it?
Yeah, when we talk about margin improvement, I consistently mention that our margin improvement story has been a structural story, which means we have done some basic fundamental interventions in our operations, because of which our margins are consistently going up. Just to exemplify, org structure optimization, at the back end yield improvement, in the field force case, the P&L leakages like expiries, etc., reduction, which have almost reached the industry best standards. Those measures will continue. Now, when we add to the revenue, I think to a great extent the revenue increase and the gross margin increase which we'll get will flow down to the EBITDA and the PBT and PAT. Therefore, I expect the margin improvement trajectory to continue, albeit not at the same slope which we have seen. It's going to go a little obtuse, but our attempt is to make sure that our profitability improvement trajectory continues unabated.
Right, and I just want to talk a bit about the European side of the business as well. How is that performing? Are you seeing any concerns there? What's the outlook there?
You're talking about the international side?
Yeah, the European business and the European performance, specifically that area.
Okay. Your performance, it's been, despite all the geopolitical tensions which we hear, our business has registered a very positive growth. We have UK as our market. We are also exporting to Germany. We are also exporting to France, also exporting to Canada. And these are our major contributors to our business, frankly speaking. The 15% growth which you have seen in the international formulation business is largely coming from the developed markets and the names of the markets I just illustrated. So despite the geopolitical tension, yes, we are also getting impacted. But as I mentioned, the structural part is contributing to the margin improvement, and new markets, new products, new customers is contributing towards the revenue improvement.
You did speak about the cash on books and how you're planning to utilize it. If you could touch upon that once again, and as well as since we are now in a brand new financial year, any outlook that you can leave us with?
Okay. Yes, we have close to about 127 crore cash in our books at the moment, with a good amount of cash flow generation, which is going on for the last 5 years. We have used those funds. We are planning to use those funds in two ways. One is we want to increase our or substantially increase our export business. Therefore, we are investing in our plant modernization. Close to about 140 crore has been spent already. This year, we should be able to close our expansion part, both of formulation and API plant. And second is M&A. We are also looking at very actively, frankly speaking, we are looking at the M&A opportunity both in the brands or the company, in both the segment, formulations as well as the API segment. So that's how we intend to use our cash in our books for our business expansion going forward. Now, you talked about going forward, what's our guidance? Generally, as a policy, I don't give guidance, but I I definitely state that our next goal is to reach 1,000 crore, and the entire organization, the processes and the product pipeline, whether domestic or international, I think is being targeted towards reaching to that milestone ASAP. We want to continue to register growth faster than the market so that we keep on continue to increase our ranks in the market. We have seen 5 ranks going up last year in the pharmaceutical market. So that's our plan.
All right, then. Now we leave it there. Mr. Sikri, all the best for the future for RPG Life Sciences. Definitely, the company has performed well over the course of the years, and I hope that like you've actually alluded, a lot of confidence in the way forward. I hope the company also performs that way. Thank you so much for joining us on ET Now to give us a glimpse of your earnings and the way forward. That was the management of RPG Life Sciences. But from one management to another, we have Mr. Ranjit Mehta, who's the MD and CEO at Max India, joining us on the show right now. Very good morning to you, sir. Thank you so much for joining us on ET Now, and some positive updates actually coming in for FY24 from the company, with given the fact that the Q4 and FY24 results are slated to be released later this month. If you could take us through the key highlights, also what we can expect from the earnings this time in this year in terms of your overall growth as well as your business across verticals.
Q4 24. We already have about 68 beds operational on the care home side. About 200 odd will get operationalized by the end of first quarter, and hopefully by the end of second quarter or beginning third quarter, we'll have about 150 to 100 beds more. The care home at Gurugram is already contribution positive. Care at home has been is a great story as well. Contribution positive. Also, growth has been about 57% in FY24, 107% in Q4 FY24. On Medcare, which we now have about 1,100 SKUs, on mobility, respiratory side, MOU with IIT Delhi to help us, innovate products for seniors. The growth has been phenomenal, 1.8x in FY24 and 1.6x in Q4 FY24. The latest business vertical that we launched, which is called Age Easy, as the word suggests, helping seniors age with ease and joy, helping them with care solutions for chronic disease conditions. We already launched 3 solutions: the knee pain solution, the fall solution, and the hearing aid solution. There also has been a very healthy growth, sequentially about 53% revenue in Q4 FY24 over Q3 FY24. So overall, quite a satisfactory year and a great quarter as well.
Right, and what we also want to know, Mr. Mehta, firstly, good morning to you. The gross revenue for Antara Assisted Care Services, that's doubled in FY24. Help us understand what's aiding this growth, and can we expect the same and similar growths to continue in FY25?
Well, what is behind this growth is a very healthy growth in all 3 segments. So while we had only 68 beds operationalized for, care homes, there's been a growth, on that side, as well as I said, about 38%. The care at home segment has grown very well, about 107% in Q4 FY24. Medcare 1.6x in Q4 FY24, and Age Easy, as I said, 53%. So these 3 are, contributing to that growth. Now, hopefully the momentum should sustain. Difficult for me to, give you a figure on that.
Right. Your care at home vertical has seen a doubling in its Q4 gross revenue. If you could tell us what actually drove this growth and what are your projections going ahead?
One is deeper penetration in NCR where we are, but we also entered Bengaluru and Chennai, which have also contributed to that growth. And a steadfast focus on high margin, services in that area, and a lot of focus on patient, safety and satisfaction. So a combination of that and word of mouth has helped us grow, in that vertical.
Right. Also, if you could take us through the upcoming projects, what are the status of your projects in Noida, Gurugram, as well as Bengaluru? And, through this concept, run us through the concept of India's first intergenerational project you were coming up with in Gurugram. Could we give us an update on that?
As I said, the Noida community, the first phase 340 units already sold out. Now waiting approvals for phase 2. And the possession for phase one will happen somewhere between December to March, of next year. December of 24 and March of 25 is what I mean. As I said, the financials are quite healthy on that side. Gurugram is a very interesting experiment on intergenerational, where Max Estates is constructing 7 to 8 towers or 2 towers dedicated to senior living, where we have partnered with them to operation to handle the operations. So it's an interesting experiment because we have often heard from seniors that while they want exclusive spaces, they also want to be amidst younger people. So it's a combination of that. While there'll be exclusivity in terms of club areas, they will also be part of a large community. That's about 300 units. Bengaluru, as I said, already filed for approvals. Definitive agreements will be signed soon. Term sheet was signed some time back. That's about a 1 million square feet, 544 units. That's about 8 minutes, from the airport.
Right. If you could tell us what's the rate of repeat patients, what are the kind of trends that you're witnessing, especially in the renewal side?
That's more relevant for Antara assisted care services. So let's say on AGZ, which is the chronic care solution platform, we have been pleasantly surprised. We had expected to have till March of 24 about 500 repeat customers. We launched that in August. We got about 1800, right, which is a vindication of how the product is resonating with the customers. On care at home and care homes, there's a healthy 40-50% renewal rate that happens depending on the need of the customer.
Okay, thank you so much, Mr. Mehta, for joining in with us this morning on ET Now, giving us an understanding in terms of the company and the outlook for the company going forward. But with that, let's just slip into a very short break, because after the break, we'll be back and we'll be taking all your stock-related queries with our experts. So don't go anywhere.
Welcome back. You're watching Buy Now, Sell Now on ET Now. And 15 minutes ago, you had the markets that was inching towards the day's highest point. And 15 minutes later, there you go. We're seeing actually the fall from the day's highest point for the Nifty. And Nifty Bank, in fact, is drifted much more lower in trade. Now it's given up almost over 300 points from the day's highest point. But let's talk about your stock related query, viewers. You can write to us on the WhatsApp number that's flashing on the screen. Let me bring on board our experts today. We have Kush Bohra on the technicals, while on the fundamentals we have Vivek Karwa. Very good morning to you, Kunal, I beg your pardon, Kush, as well as Vivek. Thank you so much for joining us on ET Now, and thank you for waiting by patiently while we were actually talking to the management. So let's take queries that have already been pouring in. This one is coming in from Karishma from Delhi, and she wants to know if she should look at buying Piccadilly at this current price. I believe she's talking about Piccadilly Agro, if I'm not mistaken. Kush, have you tracked the tracked the charts for this particular counter today?
Well, today I have. In fact, just now, as you mentioned it's a one-way ride, circuit to circuit, not the kind of stocks that I'd personally invest in or recommend, because when the lower circuits start to hit, it becomes difficult to exit. In any case, it's overstretched right now. So, a fresh entry will anyway be difficult because of the circuit, but also on a technical front. The best way is to hold this with a trailing stop loss, which could be placed just above the lower circuit point for the day. Of course, no further additions, can be made, should be made. Just hold this and ride the momentum until it lasts. In fact, not a bad idea to book partially also, by the way.
Not a bad idea to maybe book some profits partially as well.
But Kush, what about buying then? Do you think this is a good price to buy?
Not at all. As I said, on both fronts, you can't. One, it's an upper circuit, so you won't get any. Plus two, it's in a deep overbought territory. So, the risk reward ratio doesn't favor, fresh buying at all.
All right. Vinny.
Okay, let's move on to the next query then. This one is on Indus Towers, Vivek. Bharatwaj from Coimbatore wants to know, as a long-term investor, can they look to buy Indus Towers at the current price?
I say at current price, I would advise a buy, but my target would not be very, very big over here. It could be maximum 400 to 420. Now, reasons being, lot is being expected that We India would revive, and once it revives, this company, because it has huge receivables from We India, this company also would benefit. But overall, I'm not very, very confident yet, and hence at this valuations, yeah, it looks decent enough. So 400, 420 could be the maximum target. So at these levels, at those levels, you'll have to book profit.
All right, Kush, this one is coming from Subrata Ghosh and he has Orient Cement in his portfolio, 1500 share. His buy price was around 234 rupees per share. He wants to know, well, will he be able to recover his losses and what sort of strategy should he do with this one?
So I don't think that losses are too deep yet in terms of the percentage at least. The stock is staging a revival, but then there are multiple selling points, 230 being one of them. So if that level is taken out, then he could very well see, profits on this position. However, with the kind of supply pressure that we've seen recently, there is a possibility that the stock could remain sideways for some time. So I would hold this with a stop loss of 215. If that is taken out, lower levels are also possible. So hold this with 215. But I think once the selling pressure is absorbed, I think the stock could head to 235 or close to those levels, which is his buying price.
Vivek, this next query is on Zomato from Chandrasekhar from Bangalore, and they bought Zomato shares at a price of 79.9. So clearly, they are making a good amount of profit there. Stock is currently at 194. What's the view? Should they continue to hold this, or what should they be doing with Zomato now?
Previous show, it could be some 4-5 days before when I did with you. I had given a buy on Zomato with a target of 220, and as a disclosure, I hold it in my personal portfolio as well, and have been recommending it to the clients. Now, why Zomato with this? First of all, this quarter looks like it's going to be super for Zomato, and most likely they are going to come in black. It could be marginal profit, but yes, from losses to profits is a great jump. So if not this quarter, maximum by next quarter. Recently, they had increased the delivery prices, which is minuscule when compared to individual level. But at company level, if you look, this is going to have big impact, almost 2,000 crores impact on the balance sheet of Zomato. So it looks very, very interesting stock at these levels. Yeah, there was a time at 170, I was giving a sell call, and at 60 rupees, I bought it myself. But now at 195, also it looks like a buy.
All right, that's the take coming in on Zomato. Definitely a positive view coming in from Vivek on that particular front. But let's talk about this query coming in from Alok Mangla. And this one is for you, Kush. He has Kumar Infra, which he's bought at around 575 rupees per share, as well as he has Bank of Maharashtra purchase at 50 rupees per share. One, if you look at both of these counters, he's making good set of profits. So he wants to know whether he should continue to stay put with this counters. And if yes, then what sort of a target should he look at, or should he exit?
Kumar Infra with the current setup looks like a very clear hold. The stocks had a round of profit booking and rebounded from those support levels. Momentum indicators also picking up. I think on a weekly closing basis, 680 was a resistance, and hence you're seeing the stock spend some time here. But I think once that is taken out, the stock could very well from here on move to 710 and then 735 levels also. So J Kumar Infra is a very clear hold. He could have a trailing stop loss, somewhere close to, let's say, 655 kind of support zones. Maharashtra Bank, the momentum is positive. There isn't much to suggest that there could be any structural change here on the downside. However, on the weekly setup, we are looking at some sort of negative divergences, which suggests that a profit booking round could be around the corner. So my suggestion would be book partially in Bank of Maharashtra, and once it drops again close to those 65 levels, add it again.
All right, so that is the take coming in on Bank of Maharashtra. Let's take this next query then, and this one is coming in from Krishna from Bangalore, and he wants a 3 to 6 month view on Kotak Mahindra Bank as well as on Sarah. What's your take, Kush? Do you think it's now easier, or has become even more difficult to take a call for 3 to 6 months for Kotak Mahindra Bank, given the fact that you have news flows that are impacting the stocks?
I think the last time when we did a special on, or rather we had a longish discussion on Kotak Mahindra, my view was that when a stock sees such kind of a drop, it becomes a very attractive buy. But that's when the stock is in an uptrend, and Kotak Mahindra has not been there. I think from those levels also the stock's actually seen a sharp bit of correction. Now, while this does appear to be some sort of a support for the stock, and approaching oversold territories, there could be a rebound. My suggestion would be to perhaps still wait it out, because it will require some bouts of fresh investment and fresh legs on the upside. So from my perspective, there are plenty of other stocks in this space which are doing well, will continue to do well. So I wouldn't venture a trade in Kotak just yet. However, if someone wants to, then from a risk reward ratio, it does look a little attractive now. Terra, on the other hand, has had a stellar run, has come into a bit of a pressure, but I think this is a time to accumulate. A positional stop here comes in at 6,900. On the upside, you could very well see the stock headed to 7,400, and once that is taken out, 7,700 also. So Terra is a buy from these levels.
Okay, that's the view there. But on that note, we'll slip into a very short break. But HDFC Mutual Fund has announced the launch of NFO under its thematic fund named the HDFC Manufacturing Fund. The fund will be open-ended equity scheme aiming to unlock the potential of India's manufacturing sector by investing predominantly in equity and equity-related securities of companies engaged in manufacturing activities. The NFO for HDFC Manufacturing Fund commenced on 26th of April 2024 and will conclude on 10th of May 2024. HDFC Manufacturing Fund's investment strategy emphasizes a core portfolio comprising at 80% at least investment in the stocks representing diverse sectors under the manufacturing theme. Into a break on that note. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's keep it going with all your stock-related queries with our experts for today. We do have Kush Bohra as well as Vivek Karwa. Kush, this query I'm going to take is for you, and this one is from Lakshmi from Hyderabad. Now, they have a couple of stocks. One is Nuvoco Vista, 50 shares at a price of 460 rupees. Should they sell, hold, add? What should they be doing with this? As well as Bandhan Bank, 250 shares at a price of 254. What should they do with this one as well?
So, see, as far as Bandhan Bank goes, I think here there is an attempted recovery, underway, but I really wouldn't, trust this jump, at least now. However, the silver lining is that the 175 level is a pretty strong support zone, and once again, we are seeing a rebound from here. Back in 2020, this was the level that the stock had rebounded from. So I would wait and watch here. 175 is where I would keep a tight stop loss and just hold. If that is taken out, I would exit this. As far as Nuvoco goes, this stock is also attempting a recovery. There could be resistances at multiple levels. 460, if I'm not mistaken, was the buying price you said. I think it will be a while before they see it. But if time and money isn't really a constraint in the near term, then hold on. There's a possibility that the stock could move to, let's say, 380 and 400 kind of zones. Perhaps that would be a better exit point.
All right, this was come from Shaurya, who's writing to us from Gurgaon, and he wants to know about Sona BLW. Actually, Vivek, he's purchased at the price of around 627 rupees per share. He wants to know whether he should hold or exit this counter, and he has a long-term perspective on this one.
See, the first red flag is it is trading almost 14 times to the price to book value. And if you look at the valuations also at 75 forward pay, it looks super costly at these prices. Now, yeah, forging should do well going forward, but 615 could be a risky buy. I would suggest on every rise book some profits, and again, if it by chance comes to 500 levels, that could be a good price to re-enter. So at these levels, it would be an avoid or a book profit as well.
Okay. Let's move on to the next query. Kush, this one is on Federal Bank, and it's a short-term query. They have 2,000 shares, 500 shares of Federal Bank at 155. Also, they want to know on Yes Bank, 2,000 shares at a price of rupees 21. 6 months perspective for both these stocks. What is it looking like, and what should they be doing? The viewer has not mentioned the name.
Federal Bank fairly positive. The stock's actually seen a gap up today, and it's holding on to those levels, which is quite encouraging. I would hold on to Federal Bank, and my trailing stop loss here would be 162. There's a possibility that the stock from here on could stretch this run and also head to 175 and 190 kind of levels. So Federal Bank very clear hold. Yes Bank, my suggestion would be to exit despite the drop that we're seeing in the stock. It's still above the buying price. So not a bad idea to take some money home and perhaps invest in some other share in the financial space also if you want.
All right, this one's come from Padma, who's writing to us from Bangalore. Kush, this one also is for you. 15 shares of Raymond at a price of 2,030 rupees per share. Wants a 3-month target.
uh, Fairly bullish on Raymond. Even before this move came about, day before and today, we're fairly bullish on Raymond. I think this is an accumulate at all levels. Any kind of dip that you get towards 2050 will make it even more attractive. But you have an existing position. Continue to hold. The stock is ripe for a move towards 2,500. Let's say from a 3 to 6 month perspective, and a stop loss here would be at 2,100 level. That's a resistance zone that the stock has cleared and made this move. So Raymond, as I said, continue to hold and add more on decline.
Vivek, this query is from Ron from Mumbai, and a couple of stocks. One is they want to know, is it time to switch from Indian hotels to ITC? What are your thoughts on that? As well as investing in Vedanta for dividend yield. Is that something one should be looking at? And if they should enter these stocks, at what price should they be looking for Vedanta and ITC?
I would ask him to continue in Indian hotels instead of buying ITC. Now, what market is expecting is that ITC would announce a demerger of their hotel chain, and that would create value. When is that going to happen? God only has idea. Even ITC management doesn't have, it seems, the idea. So stay in Indian hotels. That would be a better bet. Now, when it comes to Vedanta, see, looking at the metal sector overall, I think the stock should really do well, even going forward from these prices. So 408 is a good hold even now. But if your idea is to hold it for dividend yield, then it's not good, because in markets you don't come for dividends or dividend yields. In markets you come for growth and capital appreciation. So you got to keep your agenda very, very clear why you're in the market, first of all.
Right, this next query that I have is coming in from our viewer, that is Sampath, and he has 180 shares of MTAR Tech at an average price of 1,976 rupees per share. Kush wants to know whether he should hold or sell. He has a time frame around 6 months to 1 year or so. Also, he has Jubilant Ingravia at a price of around 417 rupees per share.
So MTAR Tech is consolidating. There is a revival underway, but then the stock's actually now in a range. So 1950 on the higher side and about 1800 on the lower side. I think there is a possibility that this range could be taken out in the coming month or so. So continue to hold on. Once this range is taken out, the stock could very well head to 2050 2100 kind of zones. So continue to hold MTAR Tech. As I said, the revival is underway. Looks like it's on a strong footing. As far as Jubilant Ingravia goes, here too we are seeing this recovery. The level that I'm watching for, however, is 575. We've seen time and again that this level has proven to be a bit of a resistance. If that is taken out, if and when that is taken out, the stock will head to 600 plus levels. So here too, my suggestion would be to continue to hold. A trailing stop loss here comes in at 520.
Vivek, we have Bisakha from Kolkata who wants a long-term view on Prestige Estate. They are holding 50 shares at a price of 588, and they're holding Sonata Software 100 shares at a price of 273. What should they be doing with both these stocks?
See, when it comes to Prestige Estate, overall looking at the real estate package and the sector as a whole, I think you should hold it for long term. Now, compared to peer groups, it looks quite undervalued. That is one thing. And going forward, I am very bullish on real estate even now. So the economy is on the path to attaining that $5 trillion dollar mark. And as and when that happens, there is going to be more and more demand of real estate as a sector. So please hold it. It's a great buy even at these prices for long term. Sonata has done well till now, but at these prices, I think you can book profits in this stock particularly. I'm not very bullish on IT services as a sector, and that's the main reason I would avoid a stock like Sonata. Yeah, stocks, the new age tech stocks like Zomato's, I would prefer, but not IT services.
Right, this one is coming in from Subramanian from Chennai, and Vivek, this one is for you. Subramanian already has IDFC as well as Federal Bank in the portfolio. IDFC he has at a price of 61, Federal Bank at a price of 86 rupees per share. He wants to know whether what's the outlook on both of these counters, and also should he stay put with both of them and add some more in his portfolio.
See, Bank is definitely a hold. And on a lighter note, IDFC's case is like this. People are last 10 years, I'm hearing that IDFC is going to become like HDFC. But the fact is HDFC has become like IDFC now. So, so yeah, absolute long term from here, looks like IDFC might recover at some point of time. But again, when will that happen is a big question mark. So I would still prefer if you can shift from IDFC to HDFC Bank. Just because IDFC is listed, I mean, the registered office is in Chennai, doesn't mean you have the shares and attend their AGM. You can always buy HDFC, and that would be a better bet.
Kush, this one is on ADSL, that's Allied Digital Services, and Castrol. Satya wants to know the right time to buy both these stocks.
Sure. So for Allied, the stock is very close to the 20 weekly moving average. It's also a support zone. So from a risk reward perspective, this looks like a good entry point. The stop loss is very clear at 135, and on the upside, you're looking at 152 and 160 as the near-term targets. Now, as far as Castrol goes, what we're seeing here is that there's a fair bit of volatility in the stock, but every dip, in the recent past has turned out to be a buying opportunity. Even now, the stock is taking support close to those 205 levels, which has been a medium-term support zone for the stock. So this is a good entry point. Have your stop losses a little lower, let's say about 200 levels. That's where you place the stop loss. And on the upside, the stock has the strength to move to 220 and then 235 levels. So Castrol, have your stop loss at 200, hold for or other fresh entry, buy for targets of 235.
On that note, we'll actually slip into a break in this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's talk about the query coming in from Lakan, who's writing to us from Haryana, and he has 420 shares of Credo brands, which he's purchased at 202 rupees per share. Kush, he wants to hold it for 6 months, but he wants to know what's your view. I believe, given the fact that this one is a fairly recently listed counter, Credo brands, how is the charts looking? Do you have any history that you can talk about?
I don't track this very actively, so I'm sorry, I'll have to give it a miss.
All right, Vivek, have you tracked this one by any chance? Any views on Credo brands?
This company manufactures the brand called Mufti shirts, if you look at. Now, quite a small company. Of course, the brand is quite popular, but when compared to other bigger brands in market, I would still avoid this stock as a whole. So stay away. That would be a better idea.
Stay away from Credo brands. That's a word from Vivek. But Kush, this next query is from Nilam from Jaipur. They're holding Lux Industries at a price of 1,245. What is the target that they should keep in mind for the next 2 to 3 months right now, or should they already book profits here?
After a long slump, the stock has seen, a fair bit of recovery last week and a very smart follow through this week as well. And finally, I think, there are some profits to be had. Definitely, a recovery play, on here. Hold this with a trailing stop loss at 1400. The stock has the potential to hit 1600 and then, 1680 levels also in this current momentum. So my suggestion would be to hold on to this one with a trailing stop loss.
This one is for you, Vivek. This one's coming from RK's. A couple of stocks that he's mentioned. One is AU Small Finance Bank, Balaji Mines, VRIDHI Investment, also Amara Raja Batteries. He wants to know, out of these counters, which one should he bet on for a period of about 2 to 3 years?
Balaji Mines, Amara Raja Batteries, VRIDHI Investment, and
AU Small Finance.
Okay. See, I would go with Amara Raja Batteries and AU Small Finance. Now, AU has already announced that they would look at becoming full-fledged bank. Yeah, that might take maybe 2 years or 3 years as well. But the way it is going, it is on the right trajectory, I feel so. Kotak is always hungry for capital. A great industry. Water is going to be next crisis. This is known fact. But if you look at other companies, they look much more better than Kotak. Stock was lingering at 100 and 200 rupees. Now it has done so well at these levels. Surely I would be booking profits.
Okay, this next query is for you again, Vivek, and this one is from Nagraj from Bangalore. They're holding 2,000 shares of Tejas Network. As a long-term investor, should they continue to hold, or what should they be doing with this?
At this prices, I would book profit. See, you're talking about maybe 300 P of the stock. So if you're going to buy at these prices, you're paying for next 300 years earnings at today. I mean, very, very costly. Yeah, telecom looks good overall, but at this prices, surely sell.
All right. This next one is coming in from Nanta Gopal, who's writing to us from Bangalore. This one's for you, Kush. And he has some cash with him, given the fact that he's booked profits in some of his holdings. He wants to know which one is a good counter that he should look to invest in for a period of 1 year. One of them is HDFC Bank, the other one he's given is Reliance Industries, and the third one is Nalco. So which one should he look at to park his money for a period of 1 year where he will make good gains?
I'm assuming that he can go ahead and split this money up also, so that's not a bad idea. HDFC Bank, Reliance, both are great picks. Both are the stocks that we are bullish on. Reliance, it may not really give you an alpha, but from a steady return perspective and a stability perspective, looks good. HDFC Bank, time and again, we've all spoken about this, how we still believe that this is a good investment. 1717 is a very reasonable target. Just that in place of Nelco, I would add Geo Financial Services. So, you could start accumulating at these levels. Any dips you get till 350 levels should also be an opportunity to accumulate. So, HDFC Bank, Reliance are an add, but, you can consider Geo Financial Services also along the way.
Okay, on that note, let's get started with the queries in the rapid fire format. And, the first one, Vivek, this one is from Reena Thomas from Kerala, holding 80 shares of Tech Mahindra at 1,423. Hold or average, what should they do?
Profits.
All right, Kush, this one is coming from Kusuma from Pune. Wants the outlook on Apollo Hospitals as well as Bajaj Auto. Is it the right time to buy this one for a period of 3 to 6 months?
Apollo Hospitals, yes, you can consider buying. Bajaj Auto on dips.
Kush, Neha from Bangalore wants to know DV's Lab short-term target. They are holding at a price of 3,564 for the next 1 to 3 months. Where do you see it headed?
My suggestion would be to book profit at current levels.
All right, this one's coming from Reema from Pune for you. Vivek, Patel Engineering, do you think is a good bet for the long term?
I would avoid.
Okay, this next query is from Anupama from Abu Dhabi, holding 200 shares of DCB Bank at 138 and 100 shares of UPL at 504. Kush, what's the short-term target for this?
So, DCB Bank is a hold. The targets here would be 148 and then 155. The next stock was UPL, so we've seen some sort of a recovery here, but for me UPL is an exit.
All right, Vivek, this one is coming from Vishwanathan Nair. He wants to know about Hindalco. He has it at the price of 550 rupees per share. Should hold or look to exit?
Hindalco is a buy.
Okay, this next query, Vivek, is again for you. We have Krish from Chennai who wants to know on they hold both Bajaj Finance as well as Bajaj Auto. What should they be doing with both these stocks? Continue to hold this exposure in the Bajaj stocks?
Bajaj Auto would be a hold and Bajaj Finance too is a hold.
All right, this one's coming from Amit from Mumbai. He has 1,000 shares of Ajanta Pharma. Wants to know whether he should buy some more or look to exit. His buy price is average price of around 700 rupees per share. Spectacular returns, Kush.
Continue to hold.
Kush, we want to know on Bank of Baroda. The viewer wants to know, Sunny from Kolkata. What's your view on Bank of Baroda? Should they look to buy at current market price?
Absolutely. You can look at a fresh entry also at current levels.
All right, and with that, we come to the end of the queries. Thank you so much, Kush, as well as Vivek, for joining us on the show and resolving all of our viewers' stock-related queries. And viewers, with that, we are totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Winnie, myself, and the team that put the show together. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.